Good morning, ladies and gentlemen. Welcome to the show on this Monday, the 12th of October, 2020. Now, I'm going to tell you guys what. We're entering into the most dangerous period in, I'm going to say, United States history and Canadian history and history for the whole world, and in recent history anyway. And it's coming right up. I figure starting around December, running through to about March. So it's going to be about 4 months. Very, very bad. Very, very much danger. Okay? And I'm going to tell you one of the dangers is over in the Pacific. The Southeast Asian countries, there's a lot of turmoil over there right now. India is undergoing a massive decline in their industry and in their economy. Terrible. I've never seen anything like it. And China's the only country of all the countries on earth, the only country that hasn't been tremendously adversely affected by this crisis. It stands out like a sore thumb. In fact, the fact that Chinese economy isn't, it had a little bounce down, but it's bounced back up again. And it's the only economy on earth that hasn't been adversely affected like the other economies. In other words, it stands out on the charts, is what I'm trying to say. This has been a tremendous crisis so far, but, the biggest danger period is coming up in December, January, February, and March. And this is the way I see it. Winter is going to compound this effect, And what we're talking about is the full effects of what was done in the past, like with the lockdowns and everything else, coming into play simultaneously this winter. We can get through until March without having maybe a big war in Southeast Asia. And I'm talking about multiple countries. Without us having some sort of enormous civil unrest in the United States that disrupts supply chains. If we can get through something similar here in North America, if we can get through something similar to what Venezuela's been through for the last 4 or 5 years, where the average person in Venezuela has lost about 20 pounds from not having enough to eat. But they have kept their infrastructure together. They did keep their power supply on. They had power, and most of the time they'd have blackouts that might last 2 or 3 days, and the power would come back on again, sort of a deal. They didn't have enough food in their grocery stores. Grocery stores were half empty, about half or 3/4 empty all the time. They didn't have enough food in their stomachs, so the average citizen lost like 20 pounds. If we can get through December, January, February, and March like that, then we'll count ourselves lucky. Because this crisis, that's when we're really going to start to feel the effects of this crisis in a compounding way. And this is a very dangerous period we're going into. December, January, February, and March. In other words, this winter and early spring. If we can get through all of that, maybe the sun will start to peek through the clouds next summer, and things will start to look a little bit better, a little bit more rosy. But this is a very dangerous area we're going through. I'm like a cruise director right now, and he says, okay, we're sailing this cruise ship through an area that's full of Somalia pirates or whatever, and this is a very dangerous area for the next day or two we're going to sail through. Well, that's the way with me. I'm like, here it comes. It's coming. It's a very dangerous period where an awful lot of things can happen very quickly, and including the markets. I'm preparing myself to see the markets. They could take a huge fall out of bed. And it could start any time, really, seriously, because of the way the markets are oversold right now. So knowing all this, what I've said, I'm not going to list, I've been on here researching all weekend, And what I've been seeing is it's just too much for me to list right now of the problems. To list them all would take me about, I don't know, maybe 3 hours to sit here and list all the problems one by one. But these problems, what they are is they're what's called compounding. It's compounding problems. A whole series of smaller problems come together to make the nations, too, especially in Southeast Asia, extremely wrathful. Including everywhere. It's just the whole thing is just a powder keg. And we kind of got to get through this next period, So, my recommendation is all of the people out there, your friends, your neighbors, you go to the grocery store, the people you meet, they're all under the pressure right now, just like you are. So be very polite. Treat people very respectful because everyone is on edge, including yourself. Take time for yourself. Try to calm down. Try to do something that'll relax you, something that you enjoy to do, at home, It doesn't have to be going out to a party or anything like that, But just something you can do, that'll relax you. If it's taking your lawn chair out and sitting in the backyard in the sunshine, if that relaxes you and that makes you feel good, maybe it's stiff drink time. I don't know. Head out to the backyard and just maybe sit out and watch the sunshine or something, or pet your cat or pet your dog, and stuff, and try to relax and we all got to try to get through this period together coming up. These 4 months, these 4 bad months. These are going to be 4 bad months, guys. And I just don't know exactly how bad they're going to be, but I know they're going to, if we can get off with the power staying on and everything, the grocery store at least half full, if we can get through this period like that, maybe we can slide through it and get into next summer, and then things will start to pick up a little bit, So anyway, listen, guys, let's get started. Let's open up the charts right here and take a look at this. We got the silver price today. It's down 2 cents. 25.10 for silver today. And now what we're going to do is we're going to take a look at gold. Need a live chart. That's not the live. There we go. The gold chart, live chart, 1923.60. It's down $7 on the day. But really, I don't see gold and silver as really being down right now because they're running in their range. They're just bouncing around, up and down. I mean, that range will see them go up and down, like $10 for gold and about probably 20 cents or something for silver. Let's take a look at crypto. Crypto is going up. 367 billion market cap. Bitcoin dominance 58.3%. And Bitcoin price is 11,546 today. And it was staying in the 10,000 whatevers. It's gained about $1,000. And it's had a little bounce to the upside now, I'm going to tell you what the knee-jerk reaction is going to be if the stock market falls. I mean, we get a significant drop in the stock market. The first few thousand points it drops, they're going to dump their exchange-traded funds of GLD and SLV, and that's going to have a negative effect upon, and they're also going to dump their cryptos, to try to cover some of their losses and stuff. And they're not frightened. First few thousand points, they're not frightened, and they start to dump these things, right? But then, all of a sudden, when it starts to drop 10,000 points, they start wetting themselves, and they get really scared. And when they get really scared, they'll run back into these things. And then you'll see the price bounce. This is what will happen. And the movement back in can be a lot bigger than the movement out. If you see what I'm saying, So if we get a small drop in the stock market, expect to see gold and silver go down and cryptos go down. But if we get a huge move in us out of the stock market and stuff, then that's a different story. Then they'll move back in. Capital has a way of, when trouble comes, it starts to fly around really fast, capital. I mean, they're looking for a home for their money, and they're very fickle. They're like a herd of water buffalo. And if some noise sets them off, they could run to the right, and then later they'll run back to the left again. They just don't know where to move, when the real trouble starts to set in. Dow Jones Industrial Average today, 28,852. It's up to 256 points. No, 265 points. A little bit dyslexic on the 65 and 56. Oh, now it's 280. Well, there we go. We just jumped like 30 points. This is unreasonable, the fact that the Dow is so out of sync with reality. I mean, I run over it with you guys and I show you what it's doing, but it's unreal what the Dow is doing right now. Crude oil is down $1.25. It's at $39.35. But you notice how, guys, it's been staying around the $40 mark. Starts to get a little bit over 40. They bring it back down just under 40, and then it starts to go down around 37. They'll bring it back up to 40 again. Keeping it around that $40 range for a while now. It's almost like a peg. Bonds and rates today, we're looking at yields rising, but it's only insignificant. Well, it's 1.2 basis points in the U.S. 10-year, which is not really insignificant, but they're not going to let these yields rise too high, as long as they can help it, They're going to keep them under control, and if they start to rise significantly, like if the U.S. 10-year goes above 1%, they're going to start yield curve control. It's as simple as that. They're not going to let these yields go out of control. These yields, if left to their own devices, these yields would rise. The U.S. 10-year would be at 25%. It would zoom right up to it in like 2 weeks. Right up to 25%. That would crush everything. But that's what would happen. The yields would pop. They would go up, way up, and the bond market would crash. If they left to its own devices. But they're not going to let that happen. They're the only buyer. We've got a closed loop now, guys. U.S. Treasury and the United States, the government, the executive branch of the government, have now formed between the Treasury, have formed like a loop. It's a money loop. It's a spinning vortex of spitting out money. Basically, what they formed there between the executive branch of the government and the U.S. Treasury. They formed this closed loop. And that loop is grinding the money out. It's a money grinding machine. It's just getting warmed up. But they're on hold right now with this money grinding out machine. This is the press goes. You ever heard the press goes brrr? That's the money grinding machine between the executive branch and the government and the U.S. Treasury that they've got set up now. And that's going to go burr, but the election's got it kind of on hold for now, Once the election's over, that's going to go burr. It doesn't matter who's president. That's going to go, that money printer's going to go burr. Okay? Okay, let's take a look at the U.S. dollar index. Well, first, let's take a look at our picture. I'm going to tell you what. I had a cute puppy on there that was very smart and intelligent looking the other day. Now, this is the equivalent of a cat, of a kitten that's very smart and intelligent, And you can tell just by looking at him. He's very, very smart and intelligent cat, You can see it in their eyes. They're a really intelligent one. And he's a really cute kitten on here today for you guys. Anyway, let's get back to our charting. We're going to take a look at U.S. dollar index. 93.09 today in the U.S. dollar index. And basically, it's been bouncing up and down, but it's basically going along sideways. So there you have it, guys. There's your show for today. Thank you guys for tuning in. Give me a thumbs up. And we'll catch you guys again tomorrow. And you guys have a great afternoon. Bye-bye.